Hello. Hello.
Hi, what's up?
Nothing much. How are you?
I'm good. Yeah, it was a hectic day, hectic Friday, but it's all good, man.
Are you ready for the weekend?
Yeah, for sure.
It's
More than
nice.
necessary. Yeah.
Are you in school or you work?
Yeah, I'm working do you know SAP?
Yes.
Yeah, here in Heidelberg. So I'm in marketing, but we're working from home currently. So
Oh, so
since
you
last year, I've been working from home.
so you still have time to do other things.
Yeah, definitely. That's why I'm that's why I can concentrate on this too.
All right, that's good. That's good.
Yeah.
All right. So I thought maybe we can just touch up on the zones for a little bit. Then we'll concentrate on impulses and corrections, like counting them, which will
Right.
help you when you're doing trend lines.
Mhm.
So like the impulses and corrections, like knowing how to count them or to see when an impulse is ended or to see if it's still valid or not valid. Um,
Yeah.
it's not something that you're going to use every day, but then it's something that will help you draw proper trend lines if you plan on drawing any trend lines, and or noticing actual valid trend lines. And it's also good to know them because it will help you knowing if price is correcting or if the trend is changing. So it's basic information just to know, but then you won't be using it every day.
Right. Yeah.
Yeah, but we'll just keep it up. We'll do it in a simple way so it will be easy to remember.
All right.
Yeah. So on the zones, do you remember much of them?
What you mean?
The zones, do you remember much or less?
Yeah, yeah, I remember this. Yeah, yeah.
You remember the zones? Okay, so the
Yeah.
most important things, like we talked about, was let's say you wake up and then you want to trade the 1 hour time frame. Stick to that 1 hour time frame. You can go back to the 30-minute time frame to see if you can get an early entry or not, or just to tell you how price is reacting, or if it has volume or no volume. And then you can go on the 4 hour time frame just to be sure of what the bigger picture is doing. I wouldn't advise going on the 15, 5, or 1 minute time frame, or even the daily or the weekly, because that's not where you're trading. And if you're going to place a trade on the daily, you're going to have to give it a day for it to play out, if you get what I
Right.
mean. Yeah, so
Yeah.
that's why it's unnecessary to be browsing through all the time frames when you're trading. That's where most people make a mistake. So
Mhm.
that's the first thing to always remember. The second thing is um never have too many zones.
Okay.
You literally need maybe like three or four the most, five if like there's a lot happening, but four maximum. You don't need a lot of zones, because if you have a lot of zones, you're going to react to areas that aren't necessary for that moment. you just
Yeah.
you just need a few zones that you need to be able to place a trade and get out of a trade. Those are the most important zones. So
Okay.
never have a lot of zones. And then I swear I had one other thing.
I have one thing.
Okay.
So you told me to do Binance and I got it. But with Bitcoin, well on Binance, there's no demo account. So
Yes,
how how
that's the thing with
yeah,
Bitcoin. What's your plan?
so like my plan initially was to learn and just to train my eye to recognize patterns and like you said resistance and when and consolidation etc just to train my eye for in the beginning, but now that I'm hearing more people like you and other people, it seems like the best practice for me is to do it like practically myself and on the so just to train, and because I was going to do the theory first and then in practice, but now I think it's better if I combine both. And
Yeah.
the question was like, because I opened a Binance account and I wanted to get started. I want to get started somehow.
All right. So the Binance account, right? That's when you actually are starting, like when you're ready to start trading. That one won't give you a demo because that one, well, it was created for us like small traders, right? But then they
Yeah.
don't give you the opportunity to practice. That one is straight into the game. So
Yeah.
that one you get all of the other coins that you can also trade, because since you don't want to do currencies, right? And these coins take a longer time to play out, so you might want other coins to like play around with. That's why I suggested Binance.
Right. So how much? So I'm looking at XRP coins, etc. And
Exactly. Yeah.
how much should I invest in to get started? Like,
To get started, right? I would suggest you said you downloaded Owanda, right?
I downloaded Oanda
Did you
and they
create
have the demo version, and I'm
the
looking at forex. So I'm looking at the currencies right now
All
just to
right.
explain.
So on the Awanda, right? Did they say you should use the app or the MetaTrader?
The app.
The app. All right. So the app is still fine. Just go on the where it says currencies, right? Where you can choose what you want to trade. Check
Yeah.
if the crypto options. You can even just on the search button on where you want to search for pairs, right? You can even just type BTC or Bitcoin to see if they have it. And if they do, then you can practice with it on the demo account. So everything you do, you can practice on the demo account.
Got you. Okay, perfect.
Yeah. So, and then the Binance is for when we're now talking about big money. When we want to go to
Yeah.
big money, then we'll go there.
Okay, perfect.
Yeah. And then TradingView, it's better to do your analysis on TradingView. And the best part about Owanda, I think it's actually connected to TradingView. So
Yeah, it is. Yeah.
yeah, so it's much easier. So all your analysis, you have to do it on TradingView. The reason why I'm saying you have to do it on TradingView, right, is um it's more reliable because most brokers, right, there is a certain time all markets open, right? But then
Hmm.
some brokers open maybe an hour later or an hour earlier. So everything might be the same from like 1 minute to 1 hour to 1 hour, right? But then 4 hour time frame going up, it will be different because of that difference opening times, the savers.
Yeah.
So
Okay, got you.
that's why you have to do analysis on TradingView. And then the
Got you.
decrypt, that's for the news. You actually have to know the news and stuff like that, because some it's different with currency trading. But then for you, those news will tell you when to, like, if you're talking about big money, when to sell or to enter big because something big is coming. Because you know, like how when people talk about it, the coins actually react to someone who have talked something big about it, or someone who has bought a lot of stuff from it, a lot of coins. So you
Yeah.
want to hear those news so that you can catch the move also.
Right.
Yeah,
Perfect.
yeah. So
Okay. So I'm looking at Rwanda and they don't have crypto, but I think I'll just practice with currencies.
all right. So whilst you're practicing with currencies, right? You might actually end up liking currencies more if if when you try it out.
Yeah,
But
I think so.
yeah, but whilst you're practicing with currencies, right, I'll find you a broker that's reliable and that works in your country, and that is crypto.
Okay,
Yeah, for me
perfect.
since I have the knowledge, it's easy for me to like find one, so I'll do that for
Okay,
you.
great.
Yeah.
Great, thanks.
All right. So any other questions?
Uh, no, that's it pretty much.
All
Yeah,
right.
that's it.
Okay, that's good. That's good. You're a good student.
Thank you.
All
You're
right.
good mentor.
Thank you. I try my best. All right. So let's remember we discussed impulses, right? Those are the moves that are trending. They are pushing in a direction. And then
Hmm.
we discussed consolidations, right? Consolidations are also called ranges, so I'm just gonna call them ranges. It's smaller to type and well, it's easier. So
Yeah.
I'm just gonna call them ranges. And we said those are the most important two things to notice when you open a chart, right? So when you open a chart, you should be able to say, I see a trend or market is ranging. That's what you should be able to notice when you open a chart. So for example, right now, right, if we were to look at yesterday's movement, this is yesterday's movement, right? We can say market trended. And then here, that's the time when we said market ranged. So those are the things that will help you understand the impulses. So when you look at a chart, right, you will have a bottom, that's the low and the high. So right now we have this low, right? So let's say this, we only have this information and we didn't have any of the down movement information. All we're seeing is an uptrend, right? So you identify your low, right? So price was trending down, right? And then when it reached this area, this is where it created its low. So you've identified your low. That's your starting point for the new trend, for the uptrend. So that's what you're looking at. So when you see your low, right, the low and the high is the area where price started consolidating or it reversed. So you have your low, you have identified your low, and then you have identified your high. So this is the area where price started, this is the area where price reversed, right? So from your low to your high, that's your one. So this will be your first impulse. That's one, your first impulse, right? And then for your first impulse to be valid, this price cannot drop below the low of one. It has to stay in between this area. So everything that it does in between the low and the high, right, that's your correction too. The rules are, if it's going to be a correction, or if it's still a valid correction, right, it can't break the high or the low. The moment it breaks the high, then that means a new impulse is started. The moment it breaks the low, that means the trend has changed. Yeah. So it's good to know those things. So we had our one, right? We had one here, and then we had our two here, right? It didn't break the low or the high. Then we had our three right here. This is our three, right? So it's like 1, 2, 3. So 2 and 4 would be your corrections. Then 1, 3, and 5 would be your impulses.
Okay.
Yes. So that the moment you reach 5, the trend is ended.
Got you.
So when you count five impulses, right? So it's 1, 2, 3, 4, 5, with 2 and 4 being corrections, 1, 3, and 5 being impulses. The trend will change from there most times.
Okay.
So if it doesn't change from there, right, it will create something like it will go like let's say this is the high, right? It will go like A, B, C, right? And then after the A, B, C, then maybe the trend will continue again.
Gotcha.
Yes. So that will give you like entry opportunities, and that will tell you what to look for, because you are going to have to use your mind. Just like basic information, when you open a chart, you just have to see, okay, price has done this and this and this, right? I can anticipate that price might do this, right? And then all of the other analysis that you can say, zones and trend lines and all of that, that's confirming your thoughts. And then that will also confirm your entries. Like that will give you more confidence.
Gotcha.
But the first thing is you just have to be able to read price action on its own first.
Exactly.
Yeah. So we identified our one, right? And then we had our two. You see the two, this is our two, right? And then we had a small three, right? And then this would be our 4. And then we had 5. So this is not the best trend to give as an example, like as in the trend, because 3 isn't big. So normally when you're looking at Elliot waves, right? Let's just call them impulse and corrections. 1, right, cannot be bigger than 3. So 1, we have 1 right here, right? And then we put our high and our low, right? So we said price cannot break the low of 2. So price can do anything it wants between the low and the high. So when price breaks price breaks the high, right? That's impulse wave 3 happening, right? So you actually do measure it from the bottom or from the low of 2.
Okay.
So the confirmation will be when price breaks the high, right? When it closes above the high, right? But when you're now measuring it, right, or when you're now looking at it, right, you start it from the low of 2. So from the low
Yeah.
of 2, right, we're just assuming that this might be 3, and then when it breaks, that's the confirmation that it's 3, because
Yeah.
it's the markets. We can't be sure, only when price is confirmed. So
Gotcha.
when 3 happens, right, 3 can be double the size of 1, or it can be 1.5 of 1. So 3 has to be your longest impulse. It has to be the biggest impulse in your trend. And then from 3 you get 4. That's where the tricky part comes, right? So 4 cannot enter the area of 1. If 4 enters the area of 1, then the trend is changing. That's when you get
Okay.
the head and shoulders patterns, things like that. Because if 4 enters the area of 1 right here, right, then we have something like this happening,
Yeah.
retesting the high, and then the trend changes. That's where the head and shoulders pattern
Yeah.
come from. Right? So 4 cannot enter the area of 1. And then from 4, you will have the impulse 5. So if you see impulse 3, right, and then you get your correction, you can actually trade impulse 5 with a certain target, because 5 can be the same size as 1. So you can measure your impulse 1, right, and then measure for 5 and actually target for that, for the same size.
Okay.
Yeah. Like, even if you see a consolidation, right? Let's say market was consolidating here, right? You can actually, when it breaks out, let's say it's breaking out going lower, right? You can actually measure this distance, right? It will actually drop the same distance it consolidated.
Gotcha.
Yeah, so you can maybe have bigger positions for the first target. Maybe you're targeting 30 pips or 10 pips, right? But then
Yeah.
you can let a runner make the full move of the whole consolidation.
Yeah.
That's the good thing about forex, because you can actually measure a certain distance and use that to your own benefit. Market will always reprint some stuff.
Nice. Okay.
Yeah. So back to the impulses. So we said 5 can be the same size as 1, right?
Wow.
Also, 5 can actually end where 3, like it can break the high of 3, right? But not it won't go very far. It might
Okay.
just go maybe a few pips above, and then from there the trend will change. So 5 can be big, it can be the same size as 1, or it can just end just a little bit above 3, above the high of 3. The reason why
Okay.
5 varies, right, it's because sometimes they might want to extend the impulse so that they get enough buyers for them to sell price. Remember, for them to win, we have to lose. So they will accumulate more buyers, as many buyers as they can, for them to sell price so that they can get their profits.
Right.
Yeah, so when you count your waves, right, and then you see maybe 5 is getting a little bit bigger than the previous impulses, right, then you know what's happening. That's when you wait
Gotcha.
to see what exactly price is happening, and that will actually give you the edge to catch a very nice entry, because most people will be expecting price to continue going higher, but then you can't expect that. That also brings me to something. If you see price, let's say it made price made a low here, right? And then you see maybe price has been trending for a very long time, right? If you see a very long trend, always wait to see what's happening, because that's not a healthy trend. Price does not move in a straight line. If it's moving in a straight line, they're trying to to accumulate as many buyers or sellers as they can. It brings us back. It brings us to that point. So always watch, right, and see what you think retail traders might do here. After you have analyzed and see what retail traders might do there, right, try to think what the other side is doing and do that.
Okay.
You do not want to be on the same side as retail traders, because retail traders will probably enter the trend late. That's one. And they'll probably enter when price is about to reverse.
Yeah.
We can actually look at that from yesterday, because this was yesterday, right? Price broke out here. This was the consolidation, right? And then price broke out, right? It broke out of this consolidation. This is a consolidation because price was in between. It wasn't going anywhere, right?
Yeah.
And then price came all the way up to make this high. And then do you see how price made tiny candles here, right?
Yeah.
And then it made a bearish candle, right? So a lot of retail traders were selling at this point, and they were actually correct. But this big bullish candle, now that was the bankers accumulating more buyers. So they made people close out their buying trades here, right? And then people were probably entering sales. And after this strong bearish candle, a lot of people entered sales. I can assure you on that one. But then when this big candle came, right, their stop loss were probably on break even or just above these weeks, right? And this bullish candle took out all of their stop losses, right? And more people entered buys, because now since price had made a strong bullish move, right? And then we get a strong bullish candle, they were expecting price to continue higher. So a lot of retail traders probably entered more buys right here, especially with the fact that maybe their stop losses got taken out. So they'll want to revenge. That's where revenge trading comes in. If you lose, it's better to step away from the markets.
Yeah.
So when they enter their buys, this is why we get the drop. So this big bullish candle probably accumulated enough buyers for them to sell price. So when this candle comes, right, this would be your confirmation candle, because remember we talked about the small range. So we have a small range right here, right? And then we had this big bullish candle, right? But then after that big bullish candle, there wasn't anything that went above that bullish candle. Price stayed in the next candle, right? The next body, right? It stayed inside the body of the previous candle. Which is a bad sign. Remember, we said if you see a big bullish candle, right, and the next candle that prints does not go above the high or the low of the previous candle, then you just have to wait, because anything can happen from that moment. It's not telling you if price wants to push higher, and it's not telling you if price wants to push lower. It's just inside the candle of the previous candle. So you wait.
Got you. So can we go over the clear signs again?
The what?
Like the clear entries.
Okay, the clear entries, right? So this is the interesting part. You see these tiny candles, right? These small candles, right? Yeah. And then you got this strong bearish candle, right? But then this bearish candle, you see how price didn't go like below the low of our previous candle. It just went higher. It just pushed up, right? And then it closed above these small candles, right? So this was the clear sign to buy. This was a very good sign to buy. Like if everything was proper in the markets at that point, right, price would have actually pushed higher because of that candle. That was a very good candle, right? But you want the next candle to actually break the high of the previous candle. So we can get a candle like this, right? Let's say this is our bullish candle, right? We can get a candle that's opening and it pushes lower, right? But when that candle closes, right, it needs to close above the previous candle. So when it closes above the previous candle, right, that's when you enter. That's your clear sign of entering.
Okay.
If this red candle had closed below this the previous bullish candle, right, that would have been your sign to buy, to sell, I mean.
To go short. Okay.
Yeah, it's very similar to this. So we got the bearish candle, right? You see this bullish candle, the bullish candle that came after that, right? Now this candle was telling us that price might actually push higher, right? But then the next candle, it did break the high, but it closed below the low of the previous candle.
Yeah.
And it closed as a strong bearish candle. Now that was a clear sign to sell.
Got you. Okay.
Yes. And then you would something that would put more confidence in your analysis, right, or in your trade for you to like hold longer, right, would have been the clean traffic. You see at your left, we had price shooting up with no consolidation, no ranges, no bearish candles. That was your confirmation that price would drop, will make a big drop.
Okay.
So that would have been a clear sign, and then this would give you more confidence to hold your trade.
Yeah.
Yeah. So those are like things that you just need to understand.
Yeah.
Because the moment this red candle refused to close above, that was changing the trend, and then this one was still telling us, the next bullish candle was still telling us that price could push higher, right? So if this red candle had closed above this previous bullish candle, right, then we would have seen price going higher, but it refused and actually closed below, which gave us clear signs that price is going to sell.
Down.
It's going down. Yes.
Got you.
Yeah. Do you have any questions so far?
No, perfect. That was very perfectly explained. Now I got it.
Yes. So like those are the simple things that people don't actually take note of. The closing of the candle is always very important. So it's better to wait for the candle to close than to enter whilst it's still printing.
Right.
Yeah. So let's say you want to take a trade, right? You can wait for this candle to close, right? That the candle that you're waiting to show you the direction of where you want to take your trade, right? And then you can enter when the next candle is printing, because you're not going to stop the markets. You're not going to stop a candle to print for you to enter a trade. You just need, if you're waiting for one candle to show you confirmation, right, you can enter whilst the next candle is printing, as long as you have your confirmation candle.
Okay.
Yes.
Perfect.
Yeah. So those are the most important things to take note of. It's candlesticks.
Okay.
Yes.
So like I wanted to really focus on training my eye to recognize these charts, because I'm sure that people can wake you up at like 4 o'clock in the morning and you know exactly what exactly what to look for.
Yes.
And so what would you say would be, like, if I'm looking at charts and I'm looking, because I want to take because I like the simplicity of your videos on YouTube. So I want to take your videos on YouTube this weekend and just sit on the balcony and watch. So what would you think is the best exercise for me to do over and over again, till I'm dizzy, like to do over and over again, watch your videos? What would be the best exercise for me to do?
I think the best exercise, right, is knowing your zones and your candlesticks. Like in all of my videos on YouTube, I explain like zones literally every single time. Like, I mean, I get very passionate about this. Zones are very important. And the more you draw them, right, like I said, even if you just draw one chart every single day, you will reach a point where you don't even have to draw them. When you open your chart, you will just see there's a zone there. You might not even need to do any analysis. You might just see a trade literally the moment you open your chart. So I would say knowing what the market did before you. So if you open your chart, right, look for is the market trending or is it ranging? That will tell you what to do. If it's trending, then you know you have to wait. Because if you want to enter in a market, when you open a chart and it's trending, right, it's going to start ranging. And then you're going to be stuck in a trade. So if you open your chart and you see the market is trending, don't do anything. Wait for a pullback or a range to actually happen for your trade to come. But if you open a chart and you see that it's ranging, right, then that's good. You have a trade opportunity coming. So all you have to identify is your range. So you mark your range, right? Let's say we opened our charts, and this is Bitcoin, right? We opened our charts and we see this. This is a range because market made a low here, right? Market made a low here, and then it came all the way up to make a high, and price has been rejected on this high. See, these are all rejections, right? And then when price came back all the way down, right, this can actually closed below, but price is still inside the range, right? So this is a range until price breaks out and actually starts trading below the low. So that'll be our breakout, right? So when you have identified your range, right, now look to check, like look at your left, right, see if market was trending down or up. If it was trending down and then you see a range, it's most likely going to continue down. If it was trending up, you see a range, it's most likely going to continue up. That's where you get your trade.
Okay.
Yeah, so it's just identifying if the market was trending, and if you see a range, highlight your range so that you know when price breaks out or if it closes above this area or below this area, I'm entering my trade. And then when you have your range, right, also identify the levels where you're expecting your trade to go. So if we're expecting price to break, right, I would also highlight the area where I'm expecting my price to go. This will be the area where I'm expecting my price to go. So I know if I enter here, I'll put my TP there. So you enter both ways, if they are buying or selling. You never look at the market in one direction. You know market's going to buy or sell. Yeah, but then don't let that confuse you so that every time you see something happen, you buy and you sell. No, you know that market can either buy or sell, right? But then using your knowledge, right, you're going to analyze and see, okay, I'm seeing this. I'm seeing price is pushing lower because see, price made a very nice trend down, right? It did break here, but price is still inside, right? If I look at my previous candles, right, they're strong bullish candles, strong bearish candles, right? These are tiny bullish candles, right? So I'm expecting price to continue lower, right? I'm not expecting price to continue. I know that price can come all the way high and probably break and go up above, right? But using my analysis, checking my candlesticks, right, I'm expecting price to push lower. So I would be waiting to sell. Although I know that price could buy.
Gotcha.
Yeah, so
basically you don't follow the market, you just wait until the market comes to you, basically.
Yes, you adapt to the market. You don't tell the market what you want, what it wants to do. You have to do what it's doing. Yeah, so most retail traders are trying to make the market do what they think. That's where the mistake comes from.
Exactly, yeah.
Yeah, so because if they see market it's down here, right, they want to sell it and they sell it and then price doesn't sell and then it goes higher, right? They're going to hold that sell because their analysis was saying it's selling, so they're gonna wait and they're gonna hold. That's where they keep on blowing accounts.
Right, exactly, yeah.
Because they are refusing to let the market tell them where it's actually going.
Right, yeah.
Yes. So you don't actually have to, you just do what the market is doing. You just follow that. Like if you follow that, you'll be fine.
Yeah.
Yeah. Perfect. So all right. On zones, do you think you're getting it properly? Because those are the most important things that you'll be looking at.
Yeah, exactly. So can we go over the zones again? Because I want to make it right.
All right. So let's try drawing zones on, this is Bitcoin. Let's try drawing our zones on Bitcoin, right? I'm going to put it on the 4-hour time frame so that we know what the bigger picture is doing, right? So this is what we have. I'll use the arrows. So we've it's afternoon, we've came on our charts, right? We've opened our Bitcoin. This is what we have, right? So the first thing I would do, I would identify this high, right? It's not that close, it's not that near to my price, but it's a high that I can see, right?
Yeah.
And then I would identify this high and the next high. So I'm expecting if price breaks above this high, I'm expecting it to go to the next high. That's this area. And then I'll identify my low. My low would be here, right? So
Yeah.
I now know that since I have a high here and I have a low here that's being respected, then I have this in my mind. Price might be ranging.
Yeah.
So I have that in my mind. But if price breaks below, right, and then I look to my left, I'm probably thinking price will react to probably this area, right?
Ah, yeah.
Yeah, so I'm thinking if price breaks, it's going to drop all the way down to this area. And what gives me confirmation, right? It's this big bullish candle.
Yeah.
So I was expecting price to sell and create something very similar to this. So I'll probably just set my TP, somewhere at this price, the end of this big bullish candle. So that's why I would set my TP, because price can actually drop, right, reach the area, but doesn't actually hit the area that we're expecting it to react
Got
to
you.
and then
Yeah.
reverse. Because remember, zones, it's not a line, it's an area. So this whole area is actually a zone. So price will just react. Maybe it may be like 2 pips away from it and then reverse. And then you're probably thinking, what did I do wrong? Your analysis was correct. You just didn't take your profits in time.
Yeah.
Yeah,
Okay, got you.
it happens to a lot of people. So wherever you're expecting price to reach, um, always put, let's say it's dropping, right? Always put your TP a few pips above,
Okay.
just in case price decides to dip and reject.
Yeah. Got
Yeah, so that's probably what I would do, right? So I have my zones right now, right? And I know where I want to take my trade, right? So now the next thing I'll do is and I see where my trend is. So I had a downtrend, then I have a range, and in this range, right, I check my candlesticks, right? And it looks like it's printing more strong. The strong candles are on the bearish side. So I would be looking to sell more than buying, because if price wanted to buy, then the candles there will be strong bullish candles and
Yeah.
very small bearish candles.
Perish.
Yeah, yes. So the candles are very important. It tells you where the volume is. So if they are big and strong, it tells you where the volume is, where it's going. If they are very small and they have long wicks or wicks that are not making sense, that's the direction the trend is opposing.
Gotcha.
Yes.
Yeah. So that's what I'll be doing all weekend.
Yes. Yeah. So those are the three things that you have to consider. Can you hear me?
Yeah, yeah, perfect.
Yeah.
So that's what I'll be doing all weekend.
Yes, that's what you'll be doing
Yeah.
all weekend. Just pick Are you picking Bitcoin over currencies because Bitcoin is a
No,
higher value?
so I'm dabbling between the two, but now I decided to keep Bitcoin and just hold some Bitcoins for long investments. But as far as trading, which with trading I will focus on forex, because it's easier for me to get in.
If you want to trade
But
something that can give you like that is a high value, right? You can try
yeah,
gold.
got you. Yeah,
Gold,
so maybe
gold,
I'll look into
gold is very similar to Bitcoin. Let me put my gold chart. Gold is very similar to Bitcoin, right? Only that gold moves better than.
But do you think Owanda is a good broker?
I don't use it, but I know it's a good broker, but I don't use it.
Got you.
Yeah. Now, on the brokers, I'll get you a list. Then you can pick
Yeah,
the one
because a
that.
lot of brokers are not available in Germany, so I don't know.
Yeah, I'll get you
But
a
yeah, you
list.
can. Okay, perfect.
All right, so this is gold. So with gold, right? With gold, like you see, like this one candle, like gold prints these big candles, right? And God can God gives money for free, to be honest, because even with a 1 minute candle, you can make $10 with a 0.01 lot size in 2 minutes.
Really?
Yeah, with in 2 minutes. That's the good thing about God.
Wow.
So if you want to master God, that I can help you do, because it actually gives you a lot of money in a very small amount of time.
Then we can focus on gold. But the
Yeah.
only one question, what does lot size mean? Because I keep hearing lot size.
Oh yeah, that stuff. All right. So lot size, right? It's the size of your trade.
Mm-hmm.
Yeah, compared to your margin. So when you open your account, right, they're going to ask you about margin, leverage, and stuff like that, right? So
Yeah.
I think I have some notes. Do you mind reading?
Yeah, I'll read a lot, so you can send everything you have. Like,
Oh, that's nice. Do you have a Telegram account?
no, not yet, but I can.
All right,
It will take. Yeah.
create a Telegram account. Give me your username. I'll send you some books to read,
Okay.
like as we
Okay.
go.
Perfect.
Yeah, because you're going to leverage your account, right? You're going to select a leverage that you need to use, right? Because
Yeah.
like to be able to be in the markets, right? You need like a big amount. You actually need big money. But
Yeah.
we are retail traders. We don't have big money. That's why we use brokers. So
Yeah.
we have these small brokers that we use, right? That leverage our account. So if I put my, let's say I put $50, right? And then
Yeah.
they leverage my account, let's say maybe 1 to 2,000, right? i'm able to
Yeah.
place I'm able to place my trades in the big market. So if I place a 0.02 lot size, right, for me
Mm-hmm.
it will look like a very small amount because it's just 0.02, right? But then for
Mm-hmm.
them, they will leverage it and make it maybe into like 2,000 or 200,000 in
Ah.
the
Okay. Got
market,
you.
in for me to be able to place the trade in, for the trade to actually go into the market.
Got you.
So
Okay.
that's where leverage comes from. So the lot size is, it's like saying I want this size, or this size of my money to be in a trade.
Got you.
So let's say you place 0.02, right? You are placing 20 cents. So 0.01, right? That one represents 10 cents. So you're saying for every pip that moves, I gain 10 cents.
Ah. Okay.
That's what lot size is. So for every, let's say you place a 2 hole lot size, you're saying for every pip that moves, that's like $200.
Mm-hmm. Okay.
Yeah, so that's how lot size works. And then leverage, that's what's giving you the opportunity to be in the market. And then margin, so when you place a trade, right, according to the lot size that you place, right, they will hold a certain percent of your account. So you can't just be placing trades, because every time you place a trade, right, before the trade ends, they'll be holding a certain amount from your account according to the lot size that you used. So if you want to place more trades, you can place more trades with the remaining margin in your account.
Got you.
So when you hit like full margin, you can't place any more trades, or your account is running out of funds, things like that.
Yeah. Yeah.
Yeah,
Okay.
so that's where margin, leverage, and lot sizes come in.
Okay. Perfect.
Yes. And then I think about the chart, because we have candlesticks, right? And then this is the price that you'll be looking at, and then this will give you the dates. The date, like if you want to check when this move happened, this will give you the date when the move happened, right? And then this will be your tools that you'll be using, like this whole side on your left. And then you have your pairs, where it says code, that's where you get your pairs. And then you have your time frames. Like on this section on the times, right, you can pick to have the times that you want to use as you
Yeah.
trade as you trade. And then this will show you your how you want your chart to be like. So we have bars, candlesticks, halo candles, things like that. You can also use the line chart to show you where the trend is going, but I feel like it's good to know about those types, but then they're unnecessary, because if you can't see where the trend is going using candlesticks and just your eyes, then you have no business in like being in the markets. Because
Absolutely.
if you have to go on the line chart just to tell you where the trend is actually pushing, you're not going to understand zones or things that come after that.
Right.
Because just looking at where the trend is going, it's just looking at it. You should
Yeah.
be like, someone should be able to tell, okay, it's going down, or it's moving sideways, or it's going up. And then you have things like comparing symbols and indicators. I don't use any indicators. I'm not sure if you're going to want to use any indicators, but I don't use any indicators. So
Okay.
yeah, because one thing is indicators lag behind. So an indicator might show me a move way after I have already entered. Like if I've entered, someone might be showing me a chart with an indicator saying it's time to do this, and I might have entered already.
Exactly. Yeah.
Because they have to collect the data and then give you the signal.
Yeah.
So indicators are not the best option clearly, because if you understand price action, there's nothing complicated to this. It's a matter of waiting. Like
It's just waiting. Yeah.
yes, you just read your candles and you wait. That's all.
Right. Yeah.
Yes. So I think the most important thing that you'll be using is the tools and the candlesticks. And for me, right, besides the indicators, right, I don't even use most of the tools that people use, because these are the only tools that I use. So I have the trend line, right, the box, and the arrows. Those are the more, and the lines. Those are the most tools that I use. That's literally what I use, actually.
Yeah.
Yeah. So keeping it simple is the best option.
Yeah. For me too.
Yeah.
Sure.
And also another thing, I'm not saying this just to keep you with me. Like you can do whatever you want, right? But try not to look at other people's analysis or a lot of people's analysis. Like you can have a few people that you think are good and trust, right? That you can look at, but try not to put yourself in a position where you're looking at a lot of analysis, because it's going to cloud your judgment.
Absolutely.
It won't make you confident with your analysis, because now you're trying to compare all the time, and a lot of people have a lot to say about the markets, and it's like every day there's something new that they're trying to teach you.
Yeah, that's true.
Yeah, so it's better to minimize your exposure to a lot of traders. Just try to stay with the ones that you think are doing good, or something that you aspire to do, and stick to that, because what you want to do is you want to create your own trading style.
Exactly.
You don't want to be copying someone else's trading style. You want to create your own trading style.
Yeah.
So you can use if like things that I'm teaching you to create how you want to trade.
Yeah. Absolutely.
So
yeah.
I think those are the most important things when you're looking at the markets.
Okay.
Yes.
Great.
And stick to gold, and let's say gold. So let's say you're going to be looking at gold and Euro USD. I'm putting a currency pair just to give you more exposure to how the markets move. But if you were to concentrate on those two pairs only, that's everything you need to know, because how can I say this? You're not going to be catching every trade that comes on every pair, because because there's a thing called correlation, right? So since these pairs are paired against like two currencies, right? So we have pairs like Euro USD and pairs like Euro JPY. Like for example, if we put Euro USD right now, right, and then do you see how it's printing right now?
Yeah.
And then if we put Euro JPY, you see how it's sort of similar.
Yeah.
Exactly. So that's the reason why trading too many pairs is not the best option, because these pairs, a lot of them move very similar. So concentrating on one or two pairs is best. And then you're going to need to select a time that you trade. The reason why I'm saying that is because, sessions in the market. Yeah, we have Asia, New York, and London. But in those sessions, right, we have times that market have more volume than the rest of the session. The time where the market opens and when it closes, like for that session, That's when there's most volume, like the high volumes. And then if there's news, the time when the news comes out, like around those times, those are the times where there's like a lot of volume. So you will need to pick a time that you are available every day for the markets. Then on that time, see which session is available on that time, right? And then we'll figure out which pair you're trading. Because if you're trading Euro JPY right now, right, that's Euro yen. So it is Euro in Japanese yen, right?
Yeah.
Japanese yen is sleeping right now. So that means their banks are off. So that means this pair is only being moved by Euro. Because Euro is open right now. So that's so that means that would be a good pair to trade at this time, because only one currency is moving it, right? So we only need one currency to be strong and one currency to be weaker. If both currencies are open, right, then Euro is doing its thing, Japanese yen is doing its thing, you're not going to get a good trade, because anything can happen. These two currencies are fighting each other.
Yeah, gotcha.
So that's why it's easier to pick one pair and a trading time and just do that every single day. You don't even
That's what I would do.
Yeah, you don't even have to do it every day. Like I normally, like, I do look at the charts Monday to Friday, but I normally trade Tuesday, Wednesday, and Thursday.
Gotcha. Yeah. Me too. I would just keep it small. I want to keep my portfolio small and just focus and really master these things that I'm working with, instead of having like 10 or 20 things to focus on. Just really master 2 or 3 things, you know?
Yes.
Yeah.
But I think you're good for the day. Like if you understand your impulses, knowing how your impulse started, or because right now I can tell you from here, from this low, right? From this low to this high, that's an impulse. I don't even need to put my zones to know that. I can just look at it from this low to this high. That's an impulse. Knowing things like that, right, is very important. It's very important, because you're just training your eye to calculate what's going on. So understanding where your impulse is and where your correction is, that's very good, because those are the things you're going to be using to enter your trades. Yeah. So today we did impulses, right? And so the next time we do this session, right, we want to concentrate on sessions, and we'll see how each session plays out, so that you can pick the one that you think you'll be most comfortable in.
Okay, perfect.
Yes, because I can give you a pair to trade, but you might not be comfortable with that pair and might feel like you are stronger with another pair. So I want you to like look at the sessions, at the pairs and the sessions, and that will tell you what you like. So the next session we'll do it on sessions.
Okay, nice.
Yes.
Perfect.
But I think, do you have any questions?
No, that's pretty much it. I'll be thankful if you send me like some brokers and
yeah, I will send you the brokers, right? And then when you have your Telegram sorted out.
Yeah, I got it. I did it.
Right.
I will send you the link now.
Yeah, that's good. And then I'll do the rest for you.
Okay, perfect.
Yes.
Great. Okay.
Yeah, but I think
so. I'm gonna study this weekend, and yeah.
All right.
My homework. I will let you know because I will send the money now, and I will let you know when it's done.
All right, just let me know when it's done.
Yeah. All right. Perfect.
All right.
Thank you.
I hope you have a good weekend.
You too. Have a nice weekend.
All right. Thank you.
All right. Thank you.